90% of traders lose money because they don't know about smart money manipulation. In this video, I'm going to reveal the exact 3-step process that smart money use to trap unprofitable retail traders over and over again. Let's go ahead and get into step number 1, identifying a run on liquidity. And let me just break that down so it's very, very simple. So for example, price, what you'll find will be trapped between a range high and a range low, okay? And what you find happens is, for example, let's say that you're sell bias on the day. So you're only looking for shorts on the market. What you find will happen is price will come back up to what retail traders call resistance. And what you find is they want to short from this area right here, thinking that price is going to roll over. And what you find happens is retail will go short right here at resistance, and they will also go long, getting trapped on this breakout as price manipulates above these equal highs right here. So what ends up happening is retail goes short, thinking this is going to be the short trade, and what ends up happening is retail also go long on the breakout right here. So this is trapping traders to go short. They're getting stopped out, and it's also trapping traders to go long on this breakout right here. So what this is actually doing is providing the fuel for institutions to move the market in the intended direction. So what actually ends up happening, and I'm sure you've seen this many times, is, okay, you're going to short off resistance. What ends up happening is you get one final thrust to the upside, running all of this buy side liquidity, which is resting above these equal highs. And then you end up getting stopped out, and then price melts to the downside for the trend continuation play. You see, a lot of traders don't understand this, and they don't wait for this run on liquidity right here. So just this thing alone will transform your whole trading career. Just waiting for the run on liquidity will transform your whole perspective on how you view the markets. So please do bear that in mind. If you are entering a short trade, understand, where is the liquidity? And if you can't identify where the liquidity is, more than likely you are just part of the liquidity. So this is how the markets work, and we need to identify our runs on liquidity before even considering entering a short trade. Step number 2 is identifying our entry schematic. Let me just break this down. So, for example, we have this macro high, which has built up liquidity that is resting directly above in the form of buy stops, okay? In the form of buy stops, in the form of buy side liquidity. So what you find happens, so this right here is the higher time frame. So this macro high is our higher time frame perspective. However, when you do drop down to the lower time frame, this right side here indicates what it's going to look like on the smaller time frame. You see, what you'll find is price is going to chop up, making higher highs and higher lows up above raiding that buy side liquidity. And what you find here is once you break above, what you'll get is a final higher low right here, okay? Let me just remove everything so it's simple. You'll get your final high or low right here, and this is your swing structure on the lower time frame, which has ran the buy side liquidity. So if you are sell bias on the market and you do see a run of liquidity, what you're going to be looking for on the lower time frames is this entry schematic right here. So you're going to see this swing structure coming up to this liquidity sweep. You get your higher high, higher low, and then your final higher high. What you want to see is a break of structure below the most recent higher low. I'm just going to repeat that. You want to see a break of structure below the most recent higher low. Once we see that break of structure, we're then going to look for a pullback and a entry right here, and then you can look to capitalize on this sell trade to the downside. So this is how you can pinpoint whether the liquidity sweep is actually over. Because once you see the liquidity sweep, how do you actually know if that liquidity sweep is a liquidity sweep or whether it is actually a real breakout to the upside? And this right here is how we can do that. So we wait for the break of structure indicating momentum is shifting to the downside. Then you can look for a pullback and you have clear invalidation above the liquidity sweep, and then you can target opposing liquidity, which in this case would be external range liquidity, or if you have a mechanical, say 1 to 2, 1 to 3, you can also target that as well. So this is how we can pinpoint our entries once we have seen our liquidity sweep. Step number 3 is identifying our OTE, which stands for optimal trade entry. And that may sound quite complicated, but it is actually very, very simple. All that means is once we see the break of structure, so we've seen our liquidity sweep, we've seen our shift to the downside right here, indicating momentum is now shifted and our swing structure is now sell bias, we can then look for a potential short trade. And the OTE is simply just a pullback into around the 0.702 area on our Fibonacci. So if we draw that from our swing high to swing low, all we're looking for is a pullback into around this area, and this is our optimal trade entry. So right here, this is the pocket that we're looking at executing our short trades, which will give us the best risk to reward in terms of a invalidation, and then in terms of our actual target, which is going to be down here at external range liquidity. So very simply put, the OTE, the optimal trade entry, is simply just a pullback into around the 0.702 Fibonacci from the swing high to swing low that broke the swing structure. If you haven't already, make sure to join the free Discord. The link is in the description of this video, just down below, for free analysis and to stay ahead of the curve for the upcoming videos. Honestly, guys, if you're not in the free Discord, I have no idea what you're doing. As always, thanks for your time. I hope you did enjoy this video. If you do have any queries, just pop them down below and I will get back to all of you guys. Please subscribe as always, and I will see you in the next video.